Now we are going to go over the next setup itself for the continuation to see how we would continue adding these trades, and of course, how we could use a fib retracement if we want to use the fib retracement. Okay. Now, remember, if you are interested on learning, if you like this way, the way that I teach, and you feel like, or you understand this method will work extremely well for you, you will learn to truly understand the market itself. Go ahead and hit the link, click the link below to join the Royalty FX Academy family. All right. I am now opening and accepting students. All right. Also, if you type in Royalty FX Academy, well, it'll take you straight to my website where you could sign up for the course itself. Remember, I do teach 4 times a week. I do give homework, and right now our one-on-one sessions is free. So I highly recommend you take advantage of that. Okay. So let's go ahead and remove this again. TP smash, which was up here. Could we have got more out of it? Yes, we could have, but we targeting zones. Again, I'm just showing you with the 4 hour how you could continue based on what the daily is giving us. Now, I want to make that very, very clear. Okay. You could have continued. Okay. You could have continued with the same daily sell, which was all the way up there. So let's go ahead and let me throw that in there also. That was your original sell. Entry point was up here. All right. Stop loss up there. All right. Let's lock that in. Boom. All right. So these are all sales that you could have taken. Okay. Remember, we focus on sales because based off the higher time frame, we got a selling trend. The daily time frame is telling us the overall trend of the market. Whew, look at that. Current market right now. What is what are we looking at? All right, it's 10:46. All right. So today's Wednesday. What time is it, right? Yep. 10:46. Yep, March 18th, Wednesday. So bearish engulfing, breaking retest, sell right off the bat. Okay. That's just beautiful. And guess what? Price action was exactly at 5 a.m. and between 5 to 9 a.m. you was already in the trade. Even when news come out, you got nothing to worry about because you was already in the overall general trend. Now look, so again, let's throw our zones in there. So this is the previous low, right? Remember, we identified the exact turnaround point, which is the last selling candle where it closed. And then we're going to match it with the wick low, right? Which is here. And we're just going to run it straight across. Okay. Ooh, nice. Right. And we're going to lock this baby in because we want to understand when we move it, we don't want it to go away from us. Okay. Look at that. We're going to stretch this out, bring it more forward. I want it to stand out for you guys. Okay. Look at that. So just like before, all right, rinse and repeat. I will go ahead and throw a fib in there just for the teaching purposes. Okay. We understand we're waiting for a retracement, and a retracement will always and need to be the lowest is 50%. All right. 61 above icing. It's just money. The lowest 50. We don't do these numbers I won't name. Ugh. All right. I need you guys to be disciplined and be patient, and then you will make that money. The bigger the retracement, the more money you will make. So previous high, which is up here, new low. So this is right there will be a lower. Let me go ahead and annotate. Sorry about that. I am so sorry. All right. So we had lower low to a low high, breaks structure. Okay. To give you a new lower low. All right. So we know doing a downtrend, doing a bearish market, we look to sell the market at, okay, we sell at, how do we do this? I think it's like that, at a low, a high. All right. So doing a downtrend, we sell at low high and we place our stop loss at the previous lower high. Place a stop loss at the previous low high. So new lower high, stop loss at the previous low high. Okay. That way you're not stressing out. It is far, very far away. Okay. It's a big pullback for the market to go all the way back up there to wick you out. Okay. So I wish it would have let me to interact with the board the same way, but it does not. So from here is where we'll place our fib matching this low point, and we're looking at within this range point. Okay. The range point is not random. It will always be at a zone. So let's go ahead and do this real quick. So let's go ahead and place our selling fib, placing a selling fib from the top to the bottom, right? So right here, wick. Me personally, I do wick to wick. All right, wick to wick. That's me personally. If you choose to do from line to line, by all means. The reason why I'm stretching it all the way across, I want you to see. Okay, let's lock that in real quick. I want you to see that how it went within it. Okay, so look, we're gonna go ahead and annotate one more time, right? So this is all 50%. This is all 61.8, and above it is about 78. So remember, anything past 50 is just more money. We just definitely needed to go to the 50 or above, right? So markets past 50, hitting our golden line, which is the 61.8 section, right? Now we're waiting for a bearish engulfing. Look at that. It hit the zone, no bearish engulfing. Right here, no bearish engulfing. Eventually, we did get a bearish engulfing, which is right there for us to take our sell. Remember, when we take our sell, we targeting previous what? Low high. So we enter at a lower high and our stop loss goes at the previous low high, which is up here. Okay. It's so far away that way. If the market goes all the way up there, it has to be a trend reversal. Okay. And then you just sit and let the market pays you. Like literally, like sit and let the market pay you. So let's go ahead and place this. Go ahead, place our sell. All right. Here is the bearish candle. Okay. That's it right there. Let me enlarge this for you guys real quick. I want you guys to be able to see it. Let's bring this here. Lock it in. Look at that. It already went to the wick, but we looking at up here for our stop loss. Okay. I know it seems huge. It's okay. 1% is still 1%. 2% is still 2%. 3% is still 3%. Okay. Look, we're going to stretch it. All right. Turnaround point is exactly right here. That's where it is. Okay. Now I know when you look at, oh my God, risk reward ratio is not that far. Like, yo, we are trading what the market gives us. Okay. We have to target the first structure point. That's just what happened to be where it is. Did it falls past it? Yeah, it did. Look, that's how much it went. Look at that. 1.3. The key is to win. For you to win, you have to do what needs to be done. Please understand, your stop loss never got hit. So it doesn't matter if I'm risking $100 and my take profit is $50. It just happened to be that's where it is. It's not gonna always be like that. So remember, your goal is to just simply read and react, act in your best interest, and do what needs to be done. Okay, very simple, clean, straight to the point, easy money. This is something you're just sitting at, right? And again, it's really up to you, of course. If you wanted to continue, what I mean by that is, at any moment in time, right, when the market itself goes towards your first TP target, right? Guess what we're doing? We moving our stop loss to what? Break even. See that? At this point, it's nothing but wins. Look at this. Look at that. 100%. First, it looked like you was risking 100 to make 50. Now you're winning 100%. See that? Again, the same thing goes for every single one of those, right? Once market gets to your TP zone, right? If you looking for it to continue down, just put your stop loss in profit and leave it alone. But look, big money. If you wanted to want market to break structure, to bounce to the next structure point before we give you the retest to close it out, by all means, look at that. See that? Not only just that, it plummeted. Okay. That's just, again, that's easy money. All right. Easy moolah. All right. Now let's go ahead and knock out the last one, which is, let's go ahead and put this up here real quick, back to where it belongs. But we're gonna lock this because it looks good. All right, because it looks good. We're gonna lock it, right? So let's go ahead and mark this zone, which was the previous low. Okay. Little double bottom here. See, I'm matching it with the wick and I'm just bringing it straight across. Okay. Like so. Perfect. You see that? We're gonna lock it. That way we don't mess with it when we move the chart around. You see that? So we know we have a top zone and we know we have a bottom zone. Let me just place the zones first, and then I'll put the highs and the lows accordingly. Okay. Now, if you understand, I'm not here telling you about no fancy name because there's no need for it. It's just what it is. It's just a top zone and a bottom zone. Our job is to just simply read and what? React. Okay. So we know when we took our sell at the lowest, the previous high point, which is the low high, we are looking for it to break the previous lower low. All right. And that's exactly what it did. Okay. It broke that lower low, and we look for that bullish engulfing. That gives you the first aspect of a trend reversal. So we would place our fib accordingly, right? So let me adjust this fib real quick. That way, we're gonna keep it because that's what it was. Gonna match it with here. We'll keep it right there, and we're gonna lock this in. We're gonna place a new fib. Again, we just introducing the fib with it to show you how it would work. Now, once you learn to understand this, you don't exactly need the fib. The Fibonacci and RSI are the number one indicators in the world. Why? Because they don't move. It stays in the same position. It doesn't move, right? It doesn't lag. It's just what it is. As long as you understand how it works, you'll be fine. Okay. The RSI means nothing without the setup and the price action. Fibonacci mean absolutely nothing without the setup and price action, right? Because the market is at a 50% level, 61 doesn't mean it's going to reverse. No. All right. That's why we need to have the setup, right? And then we need to have our PA or price action. Okay. Telling us, hey, price is at a level. It is now time to take action. Okay. So now zone. So we had two entries. Okay. Two entries. Now we have infrastructures, meaning giving us previous high points so we could use as far as stop loss go. It's really up to you. Now, what I want to mention is the fact that we did get a bearish engulfing within this zone point here. Yes, we did. Okay. Now, again, guess what? It's at all what? I want to make sure it's the right one that I'm using because the previous one is okay. Cool. It's at a golden level, right? It's within our 61 level, and then it went all the way up to what? Or 78. Now, these are, again, I want to make sure we understand that, right? These are the structures we're looking for the market to go to before or selling, right? And that's exactly what it did. Exactly just that, right? So we got a bearish engulfing here. Again, you have to target the previous structure high. It did give us a lot of infrastructure as it was falling. So if you enter here, you're looking at above here for your stop loss, right? Now, it never wick you out. I want to make that very, very clear because guess what? It sold, okay? It sold significantly, right? Now, which means at any moment in time, you could have put your stop losses in profit, right? And simply wait, wait till it wick you out. It's really up to you. Now, I'm going to do both, right? Because we have to take it for what it is. All right. Where are we? So we're going to do a short position. We're going to sell it. Okay. Right here. Okay. See that? It already went exactly towards the next structure point, which is up here. Now, I'm going to bring this to as far as how far the market went. Okay. Look at that. It sold significantly. Okay. It sold enough for us to be profitable. And at any moment in time, we could have put a stop loss in profit. Now, remember what I said when I said, hey, you put in your stop loss at the previous low high. Why? Because if and when the market go to that previous low high to wick you out, it will give you another setup itself because it will be at a structure point because the previous low high will be a double top. And if it breaks above, depend if it give you the price action within the zone, yes, that's a sell double top for possible maybe to come back down. So from one setup to another. So one, it wick you out in profit. Two, that's a loss, which is okay. I did say about 97% or 95% winning rate, right? It went your way first, right? And then let's just say come back and wick you out because again, you targeting this. I'm sorry, because you targeting this, right? Remember, acting in your best interest is you choosing to put your stop loss in profit accordingly when you want, okay? True is his own, right? Look, that's what you're targeting, right? It went and wick you out. Cool. Let's just count that as a loss. No big deal. But guess what? We're going to remove this, right? Well, let's mark our zone first. As far as structure point goes. Now, remember, at the 50, did we get a bearish engulfing? Yes. Did it sell? Yes. It just didn't go as far as we would like it to, right? Now, what we want is irrelevant. Why? Because there are structure point or zone areas where the market did hit. Okay, as far as if you're looking at TP wise, it did hit here to go back up. But look, this right here is a previous high right there. Okay, let me just match it with this. Boom, lock it in real quick. You see that? Guess what we have there? So remember, this is still the same fib level, right? It went to a 78, right? Just a more of a deeper pull. Remember, the bigger the pull, the more the play, right? And it give us a current bearish engulfing that give us that bearish engulfing was exactly at 5 a.m. I know that because of today and what time it is right now, right? And then as of right now, okay, as of right now, you'll be up this amount. All right. As far as how far it went right off the bat, it went this much. You see that? That's a beautiful trade itself. Okay. Now we know there's infrastructure. That's just how that is. So if you was targeting that, it did got hit. And then again, we targeting the next low point. Now remember, I have not went back to my daily time frame. I want to make that very, very clear. If I would have went back to my daily time frame, I would either know this is a daily zone for the possible reversal. All right. But I have not went. This is what happened when you're in the 4 hour, right? But I'm only in the 4 hour because I understood what was happening based off the daily. I'm sticking to the daily to continue back down. If you are a inspired swing trader or position trader, this is how you do it. You could have just kept it on a daily and become a position. Meaning you just take one position and you left it alone. Now, swing trading, we swinging it every other day. All right. It gets easier and easier, easier and easier. Okay. As you can see, it sold for 4 hours straight. That's easy money. So at 9 a.m., you could have literally, TP would have been hit or choose to close. Or like I said before, right? Stop loss and profit. All right. So all of this would be all blue for you at the moment, right? That's all it is. All blue. Okay. But yeah, so this is all back testing when it comes to stop loss placement, price action, and everything always start based off the highest time frame. Look at that. Let me collapse a little bit and bring this down. I really wanted to do 3 pairs to show you it doesn't matter what pair you choose to trade. The system is just golden. All right, look at that. 1, 2, 3, about 4, 5 trades. Okay. Now I'm not saying 5 trades within a week, but that's how many setups that was available to you. Now notice I didn't talk about no buys. Why? Because we are in a selling trend. Just simply wait for it. The trading the higher time frame allow you to trade more than one pair, which means it will give you the opportunity to take other trades or other sell or other buys. Now remember, if you're taking the bullish engulfing at a specific structure point, daily point zones, it pretty much won't fail you. Not really. Okay. But like maybe 2% of 2 to 3% of it not being successful. All right. And also, I just want to throw it out there before I get out of this, right? Before we finish this real quick. Look, even here within our zone, we did get a 2 candle bullish engulfing. What do I mean? It took 2 candles to engulf the last bearish candle, right? If you took this buy, it went all the way back up, right? Clean buy, right? At any moment in time, you could have put your stop loss in profit, however way you choose to. Even if you was targeting this, it did tap it. Remember when I said you have to put it at the exact turnaround point? In the case of this one, your TP probably would not be hit because of the spread. Okay, the TP would not be hit. It would have been a little bit annoying, but it did go towards that. So, yikes. Yeah, so you could have taken that buy and then boom, straight to that sell. But remember, you hang onto the sell until the low is broken, okay? You hang onto it until you get that double bottom, low broken. You see that? It hit double bottom, right? And then it went up. So please understand, see how big this is? So at any moment in time, you never got a bullish engulfing. And by the time you got a bullish engulfing, it was already at a structure point for the reversal, right? Here, first entry, if that's what you're looking at, because structure wise, infrastructure inside it, right? So you would call these, I guess, minor zones. But when you start doing this, it become a little bit overwhelming. It's too much work. Just look at it from the outside. Just take the bigger picture, right? So it bounced off the zone. It went up. So because it went up, like, well, I understand I am on a bearish trend. So all I got to do is look for the continuation. Here it is. Boom, fell, right? And this came straight to this zone itself. Remember, we have to use the exact turnaround point. So we have this one and we have this. Okay. Again, if you're looking at bullish off zone, right? We did get a bullish engulfing, right? This one bullish candle engulf the last two bearish candle, right? And then guess what? Did it went up? Yes, it did. Guess what? It came to this infrastructure point, right? Now, like I said, based on fib placement, if you're looking at the bigger picture, you will be just fine. But by just simply taking the engulfing again, understanding the variations, just by simply taking them for what they are at a specific structure point zone that you need to understand, you will win literally 85, 95% of the time, as you can see, right? It's just a matter of how much you're looking to get. So that buy went up and all the way up here to match this double top aspect. Remember, that was the break, and you never got a bearish engulfing in between. What I mean by that is, look, you never got a bearish engulfing in between to sell it. It just continued, okay? And then eventually here was your bearish engulfing, like so, right? So TP would have been smashed. Yeah, it would have, because of spread wise, it would definitely hit it. And then 8 hour after TP got smashed, right? 8 hours, because 2 4-hour candles. 8 hours later, you would have your sell. And then 8 hours later, that same amount that you pretty much made going up, you would have made 95% of, is it 95? You would have made the same amount. Yeah. Because of how far it is. Yeah, you would have made the same amount, right? And then as you can see, it fell, bounced off the zone. And then, like I said, it's a rinse and repeat, okay? So I just want to make sure we all in the same page. We understand these structure point. And by the way, this is why we don't trade the lower time frame. There's so much going on. It could be a little bit overwhelming. But if you use the higher time frame, all you're doing is just add in position. Close, next one. Close, next one. It's like, oh, cool. It's selling. I'll wait for the next bullish candle. All right, bearish engulfing, take it. I'm gonna wait for the next bullish candle. Bearish engulfing, take it. Of course, at specific structure point. And again, as long as you put your stop loss where it needs to be, I guarantee you, you will be successful within your journey. And again, if you are interested in learning this way, and you like the way that I teach, royaltyfxacademy.com, or click the link below. Come join the family. I do teach. Again, 4 days a week. My one-on-ones are currently free. Take advantage of it. Take advantage of it right now. And just like before, YouTube, Instagram, TikTok, please like, comment, and share. And anything question that you may have, by all means, go ahead and ask me, and I will go over that specific pair, and whatever question you may have, I will go over that. All right. With that being said, peace, deuce. I am out. Woo. That was actually exciting. I love what I do.